Welcome to TradeTheNBI.com. This is John. This report is for the 8th of March. The Cohen disaster of his resignation was much to do about nothing. We had that massive decline in the pre-market that, just like we thought, would get bought back up. Where else are they going to put their money? There really aren't that many alternatives, and given that, you don't have the inflation yet that's justifying rates to rise, so you've got to do what? Maintain yourself in equity. So it was much to do about it. And it was just a perfect liquidity dump. Gap the market down, as I said. They're going to keep it down for the open. You open, people who were long get scared or forced to cover or get out, and then the shorts that were in cover, and the market starts rising again. And that's exactly pretty much how it played out. We'll get it on the 5K chart in a minute, and it's pretty obvious. There's still weak readings from our shakeout, both in, even if you look at the ES here, the NASDAQ, same situation. But overall, you're not getting enough major short activity to really do anything. I mean, you pretty much stayed flat throughout. We had that reset before, which was pretty decent, that came down here at the bottom after we had dipped below the ABM green. But again, above that ABM green, you got to maintain the long, and it's been some choppiness, but NASDAQ is just still doing far better. I mean, you're already back up to close to the peak numbers. You don't have that same, if you do the same view from a S&P standpoint, not even close. I mean, look at the disparity between the two. So tech is still king from that standpoint. The euro rise, big factor in helping propel ES higher, no question about that, or the S&P from that standpoint, at least keeping it where it is, because this only helps earnings. Looking at, see again, bonds, this is nowhere, this is flat, because nobody knows right now what the Fed is going to do because of the change in leadership, what is going to be the overall direction. Yes, there are concerns. You can read a lot of it into this. What they're saying is they really just don't know at this point. So that's important. I think it makes a difference, because it's really that frozen malaise actually is good for the market, because when governments and things don't do anything, markets like that, because business can get done, because government's not in the way. And oil is still at its peak levels here. So that's still some more weakness potentially from it, but again, it's going to maintain a pretty decent level. I know they keep talking about, you have gasoline draws, you have buildups for oil. That's going to vary. The real question is overall consumption rising? And if it is, that means the economy is growing. The growing economy means you're going to have supply squeezes, so it's going to bounce here and there, but it's still going to maintain a fairly decent level. And gold's not going to make any additional move just yet. It's close to a good buy signal there. We only got below the green with the orange. Full dip below would have been a little bit more promising from a jump standpoint, and a reset of steel from lower would have been helpful. But this particular point, it's not ready to move. This was a fun one. We had talked about this. Let me shrink it, because, well, we reached the target. We had the short signal came through. We were expecting this 96.55. Why? Oh, that's right, because it was an exact retrace of a positive extreme that began the whole up move. See right here, began them on the histogram, all in red, and that's what we were looking for. Literally was a little lower than this. It was right about there, but hit it exactly. Actually, the wick carried through a little bit, bounced back up, and then did a nice little compressed double bottom, and right at the exact same level again. And still no full reset, but this time you get the steel going above, at the same time you get the orange dip, so it's equivalent to having both down below, and usually then you look for that to end right as the steel crosses the sign, which is pretty close. Let's enlarge that, and you can see it up close and personal. It's doing it right now, which would indicate the end of that little bullish press, which corresponded with a move above the 23 to the 50, exactly what we would expect from a comeback move on that. Now the question is, at that particular point, you'd be looking for a continuation rise in red, green. You'd also be looking for cyan to move under red, and you didn't get any of those things. So we'd expect it to pull back just a little bit more. So some of this was based off the news, but you get two. You get the IRS is going to be all over everybody who was in cryptos, and then you also had a court ruling that said that yes, in fact, they can be treated like securities. So government control of what's supposed to be completely independent, right? So from the day you had the massive gap down, a lot of the short signals started before the end of the day. So obviously some people knew there were the rumors, and then the news breaks and the move's already taken place. People who knew what to do either were out or got short. And then we started getting little bicycles that came through on these various spots, and they led to some pretty decent runs. Then we ended up with another set of DOC shorts, and then before the end of the day, again, we were up at the slightly higher elevation, and this one was a little bit weaker, as you can see, with the shakeout being below, but needless to say, you could still do it. It was the second one that popped through, and then it was very quickly right after that you had the cyan move under the red, and we took off to, well, the high, and then we just continued to grow because the cyan stayed under the red throughout all of that. Didn't change until right here. Actually, it was a little bit further back. That was the first poke above, and you had a second one right there. And all that's led to is just break of the ABM green, come down a little bit more to the short algo, which you can see is right there, and then it's pretty much maintained flat. So, and that's because you've had a steel reset during this brief short setup. All in all, good stuff, and market's right exactly back where it should be. And it's just a matter of now, have they used all of their WAD, and does this present an opportunity for shorts to be a bit more in attack mode? Potentially, but still the bias is going to be that things are going to stay pretty close to where they are, because there's no real major disruption. And obviously with if you have more peace and everything with North Korea, the exemption of Mexico and Canada and the steel tariffs, it's not that big of news, but it just sort of softens the blow. But the reality is it's going to make a difference inside the U.S. And really what we're going to be looking for is, will that generate some inflation as you continue to squeeze the U.S. labor market? And that really, the question of slack, how much slack was there? Because it shows, well, clearly we've seen that with these record low unemployment numbers, that the government numbers are just fake, because you keep adding more people job-wise, and it's still not impacting overall wages yet, or inflation. So we have to see where that tipping point is. A little harder now because it's borne the fact that the government data is kind of useless when it comes to this evaluation. So we have to use other metrics to estimate it, and that's where we're going to look at those commodities and some of the other things that will start to show the squeeze of that increased demand. And I think we'll see it first probably in oil and also in the bond market. So we'll go from there. As always, trade well. I'll continue to put up charts as warranted. Trade well.